John Early here. Welcome back to Growth Talk. I'm here with my partner, Tony Sanchez. Today, we're going to talk about the data that was released on retail sales and industrial production and try and put it in a context. It's a little confusing if you just look at the monthly data. Tony, would you like to review what happened in those releases of those last two numbers?
Of course, John. So 2 days ago on August 17th, it was reported that retail and food services decreased 1.1% month over month, following a revised 0.7 increase back in June for the retail and food services. And then the industrial product index increased 0.9% in July after moving up only 0.2% back in June.
So those are huge changes, and they're kind of pointing in opposite directions. If you annualize that 1.1% growth drop in retail sales, it annualized to like over a 13% annual drop in retail sales, and that's a big decline. But we need to put it in context. There's been incredible volatility in retail sales in the COVID recession. Retail sales dropped almost down to the level that they'd been at the Great Recession, wiping out 7.5 years of growth. And then with the fuel of stimulus, it shot incredibly higher and hit a high in April. And if you'd taken the growth rate of the 7 years prior to COVID and projected that 2% annual growth rate out to this point, retail sales are still 7% higher than they would be if we'd continued the growth rate of the 7 years before COVID. And so we had this big surge. We kind of overdid it, fueled by stimulus. And I kind of expect the retail sales number to continue drifting down back to that longer term trend line that was in place before COVID hit. So I'm not terribly worried about the decline in retail sales, because I think it's correcting from an overstimulated level. And on the industrial production, that if you annualize that monthly rate of 0.9%, it would be a huge increase, a faster increase than normal. But the difference on industrial production is that it's still below the level that we had before COVID. And actually, even prior to COVID, industrial production had been trending down a little bit for a year or so before the COVID recession started. And so it has lots of room to recover and to grow. And you mentioned inflation, Tony, and we've had some big inflation numbers the last few months. And there's a lot of question about whether that will be passing a temporary thing, or whether it signals a sustained higher inflation rates. And I'm not exactly sure what level the inflation rate is going to settle at, but I think it's going to come down substantially from where it's been the last few months. And part of those numbers on retail sales and industrial production are the stories. So industrial production hasn't met a new high yet, while retail sales shot to an incredible high with the stimulus. And as the retail sales, I think, trend back down to kind of the level that we probably would have been at if there'd been no COVID recession, and industrial production works through some of the bottlenecks that have held it back, I think we're going to get to the point where supply and demand are more in line, and we don't have those big monthly pops in inflation, and that most of that inflation, that higher rate of inflation we've had the last 7 months compared to the last 8 years, I think we're going to get back to closer to that trend we've had in the previous 8 years.
I think we're starting to see a little bit of the effect of the supply chain constraints going on right now. People are saying that they order a washing machine and stuff, and they're waiting, 3 to 6 months, depending on what brands and et cetera they're coming from, because of the bottlenecks happening over in Asia. Do you think there's a little bit of that going on that's kind of messing with the retail sales as well?
Tony, that's a really good point. And there are supply chain issues, and a lot of the rest of the world has uh, has not recovered as much from COVID, and I mean, is less vaccinated than the United States is. And so some of those supply chain issues may still take a while to work out. The chain issues for the companies that are producing goods and services in the US, I think it's holding back those productions, holding back production here. And it's perhaps also holding back as much consumption as people would like for the goods produced abroad to actually get here. And so it may well be that supply chain issues in abroad that are hampering consumption here will help reduce the the real retail sales back down to that trend line that was in place prior to COVID.
So I'm a big computer nerd. So a lot of what I learn and read about when it comes to supply chain decreases, what's going on is with graphics cards. So a lot of that silicon issue when it comes to computer chips is really constrained right now because the big companies that, you know, make the chips for all the cars, the tablets, phones, laptops, computers, they're all having to play catch up right now, right? And so building factories and hiring more people, but they don't see that these factories will be up and running until 2023. So a lot of these computers are freaking out right now because these graphics cards, you know, MSRP are going for usually around $1,200-$1,500. They're up in the $3,000 range because of it. And right now we don't see an end in sight for it until 2023. Is there anything that could change when it comes to the automotive world and stuff like that that affects everyday consumers?
The thing about you look at, I have a better picture of the aggregate where you put all those things in an index and look at the overall price. And of course, there are going to be goods and services that where the price changes differently from one good to another. And you're right that the price of silicon chips is sky high because of the constraints, kind of like there was a constraint on lumber that's starting to lessen a little bit. But a lot of those supply chain issues, I think you may be right. It may be 2023 before those things normalize. And so, and those particular issues are going to have an impact according to whatever their weight is in the price index. But in the overall price index, I think the rate of the increase of inflation is going to be trending back down to kind of the normal rate of inflation we've had the last number of years, around 2% or maybe even a little less. I don't think that 5% rate of inflation is going to continue, and I think a lot of those price increases from supply constraints are already in the system.
So do you expect them to start falling here very shortly?
I don't know that I expect them to fall shortly, but I don't expect them to continue the rise in prices that they've had the last 6 months.
Okay. What I've seen, especially with like the used car market, I've noticed it's a little bit of fluctuating with the silicon shortage as well. And that, for example, my uncle, they were giving him offers to buy back his truck for more than he paid for it. It's crazy to see what's going on within the used car market as well.
Yeah. Yeah, and used cars are a substitute for new cars. And so if the price of new cars shoots higher, the demand for used cars pushes up the price of used cars as well. And that's kind of a crazy situation. And I think it's something that, you know, will probably work out by maybe that 2023 that you're talking about. I don't know if it'll work out before that or not. I just want to reemphasize I don't think we need to worry about the drop in retail sales. I think we're just coming back to a more normal level, or what would have been a normal level if we'd never had COVID. And I think the the outsized gains we've had in inflation are a reflection of the disruptions to supply chains, where production has been constrained, and also the stimulus where there was so much money poured into the economy that retail sales shot up way above trend. And I think those things are going to uh, smooth out over the next year, or certainly hopefully by 2023, or hopefully before.
Well, it was great talking to you, John. And I thank you, everyone, for joining us today. And I invite you to follow us on all our social medias, as we will be giving lots of updates throughout the week. We would really appreciate if you go ahead and drop us a like on this video, as it helps us get our video out to and our message out to new people as well. And go ahead and subscribe so you can see us next week. Thank you again.